Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 30, 2023. U.S. equity futures climbed higher as the second quarter drew to a close, while Treasury bonds continued to decline following robust U.S. economic growth and jobs data. The positive economic indicators have fueled expectations of more interest rate hikes by the Federal Reserve. The Treasury 2-year yield saw a rise of about 6 basis points to 4.93%, adding to the 16-point jump experienced on Thursday. The 10-year yield also increased, reaching its highest level since mid-March. Swap markets now indicate a nearly 50% chance of a second rate hike by the end of the year. However, these expectations will be put to the test with the release of U.S. price measures, including figures on personal income and spending, as well as the PCE deflator, which is the Federal Reserve's preferred gauge of underlying inflation pressures. While some softening is anticipated, it is expected that the numbers will still indicate persistent inflation. According to James Rossiter, head of global macro strategy at TD Securities, the markets are currently focused on the strong data narrative, but the Federal Reserve will primarily consider the current inflation situation. The decision for the Fed in July will be more challenging, especially given the substantial tightening measures they have already implemented. In Europe, bigger, quality companies outperform. In Europe, larger and more stable companies have outperformed this year due to recession and credit concerns. The Stoxx Europe 600 index has climbed approximately 0.8% and is on track to end the quarter flat, unable to build on its first quarter gain of 7.8%. Energy companies have led the advance, driven by a rally in crude oil prices. Amid these developments, there have been notable individual movers in the market. In GSA, the French utility company saw a rise in its shares after raising its full-year earnings forecast. On the other hand, ASML Holding NV, the Dutch chipmaker, faced setbacks as it encountered more export restrictions to China. Global equities show resilience. Despite rising interest rates and concerns of recessions in major economies, a gauge of global equities is set to achieve a quarterly rise of 4.5%. This resilience in the equity market suggests that investors remain optimistic about the future despite the challenges. Yen fluctuations and offshore yuan. In the currency market, the Japanese yen has weakened against the dollar, crossing the closely watched 145 level for the first time since November. However, it retraced to around 144.70 after Finance Minister Shunichi Suzuki announced that the government would respond appropriately to excessive moves in the currency market. Meanwhile, the offshore yuan has been under scrutiny following its recent slide to a 7-month low. On Friday, it appreciated for the first time in 3 days after the People's Bank of China set the daily reference rate for the currency at a level stronger than the average estimate. The yuan has depreciated nearly 5% against the dollar this year, prompting closer attention from Chinese regulators. Global economic outlook. The positive U.S. economic data, including jobless claims and gross domestic product figures, indicates that the world's largest economy is in better shape than initially anticipated for 2023. However, the yield curve inversion has intensified, with longer-dated yields rising less than shorter maturity ones, suggesting that while the economy appears stronger now, investors expect the Fed's rate increases to constrain future growth, potentially increasing the risk of a future recession. Oil market and quarterly losses. Oil prices gained as traders weighed a hawkish rate outlook against positive signals from the U.S. economy. Despite these gains, the commodity remains on track for the worst run of quarterly losses in 3 decades. U.S. economy defies recession predictions with 2% growth in Q1. The U.S. economy has defied predictions of an impending recession by expanding at an annualized rate of 2% in the first quarter of this year, according to the Commerce Department's final estimate of first quarter gross domestic product. This figure represents a significant jump from the initial estimate of 1.3% and surpasses the Dow Jones consensus of 1.4%. The growth was driven by stronger than expected consumer spending and exports. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. Consumer spending, which rose 4.2% during the quarter, experienced its fastest pace since the second quarter of 2021 when households were benefiting from stimulus checks. This robust performance suggests that the strength of consumers could help the U.S. economy avoid a recession, despite earlier concerns. Furthermore, other economic indicators also point to the resilience of the U.S. economy. Initial jobless claims for the week ended June 24 fell to 239,000, indicating an unexpected improvement in the job market. The stock markets also saw gains, with the S&P 500 advancing 0.45% and the Dow Jones Industrial Average adding 0.8%. The Nasdaq Composite, however, closed flat. These indexes are on track to end the first half of the year with impressive numbers, particularly the Nasdaq, which is heading for its best first half since 1983. The sustainability of this momentum in the markets will depend, in part, on the upcoming release of the Personal Consumption Expenditures (PCE) price index, which is a key inflation gauge closely monitored by the Federal Reserve. If the PCE surprises with a higher than expected reading, it could indicate the likelihood of consecutive interest rate hikes by the Fed. Despite facing 10 consecutive rate hikes, both the markets and the economy have shown resilience. As we move into the second half of 2023, it remains to be seen if they can continue to surprise us with their performance. The U.S. economy's ability to weather challenges and maintain growth suggests that betting against it may not be a wise strategy. Key events this week: U.S. personal income and spending, University of Michigan consumer sentiment, Friday. Some of the main moves in markets. Stocks. The Stoxx Europe 600 rose 0.8% as of 10:11 a.m. London time. S&P 500 futures rose 0.3%. Nasdaq 100 futures rose 0.4%. Futures on the Dow Jones Industrial Average rose 0.1%. The MSCI Asia Pacific Index was little changed. The MSCI Emerging Markets Index was little changed. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro fell 0.2% to $1.0842. The Japanese yen was little changed at 144.68 per dollar. The offshore yuan fell 0.1% to 7.2759 per dollar. The British pound was little changed at $1.2621. Cryptocurrencies. Bitcoin rose 1.3% to $30,792.78. Ether rose 2% to $1,886.63. Bonds. The yield on 10-year Treasuries advanced 4 basis points to 3.88%. Germany's 10-year yield advanced 2 basis points to 2.44%. Britain's 10-year yield advanced 5 basis points to 4.43%. Commodities. Brent crude rose 1.1% to $75.19 a barrel. Spot gold fell 0.3% to $1,903.09 an ounce. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.